So we'll get started in just a little bit. We'll give people some more time to get in since our official start time is until
Gotcha.
4:30.
I'm so much thinner than this guy in a picture.
You need to give us an updated picture.
I guess so, but he's got more hair, so I don't know.
So everyone's going to hear this. That's okay. Rick, those charts you gave me, did you want them in with a specific topic, or
Yeah,
I just
we
have them
can
all at
go.
the end right now?
Yeah,
But
perfect. I've
okay.
got something to say about each one of them. I think start with the SPY chart and end up with the Lilly chart.
Right. I'm going to stop sharing my screen for just a bit, everyone, so I can make sure we go in the right order. I have SPY first, SVB, then SMCI, then Lilly. Does that work?
Yep, that's the one.
Okay. Cool. All right, so Rick, while we're waiting for just our official start time and letting people get in, let's give everyone kind of a little spiel about who you are, because these are all Epic Trade subscribers, so they might not be in the room in Inner
Okay.
Circle. So I'll give my spiel and then you can expand upon it. But for everyone who is joining us, Rick is a co-moderator in the Inner Circle virtual trading floor with David Fritz and Kira Turner. Yes. So he's in there every single day with David, working with him, sharing his trade ideas and all of that. So we're here for him to give you guys a lesson in some trading knowledge and execution and things like that that could be beneficial for your Epic Trade subscription. But also, if anyone were to join Inner Circle, also beneficial there, just in general for your trading. Rick, how long have you been in the trading business? How long have you been doing this?
Well, I got to go back to when I was 13. I'm 68 now. And
Okay,
here's why.
awesome.
My grandfather used to chart stocks by hand in a big notebook, and he would carry that notebook home, and he taught me how
Mm-hmm.
to chart from that. And right out of college, that's all I wanted to do was trade on the trading floor at that time, where the Chicago Board of Trade is now. And I filled orders for Goldman Sachs, Merrill Lynch, uh, Bear Stearns even, and pretty successful at it. 8 years ago, I met David Prince. We've been friends for 7 and now partners for 4. And it's been a wild ride.
Mm-hmm. Yeah, great. Rick is really, he's the chartist of the Inner Circle. He's really technical, great at technical analysis. And so I think this will be really beneficial for everyone who is an Epic Trade subscriber. Just to kind of set some expectations here, this will run about an hour for everyone. And then Rick's going to go through what his topics that he's planned for this coaching, but we'll also have a time for Q&A. And so anyone who has a question, if you pop that into the group chat anytime throughout you can pop that question in whenever you want, and I will make sure we get to them all by the end. So by the end, we'll answer those questions. So even if, you know, we're going through an idea, a topic, whatever, if during that you guys have a question, just pop that in the chat. And if at the time we can address it, we will. And if not, we'll address it later. So as they come to mind, just put them in the chat. All right. We have about 3 minutes until 4:30, so we'll just give people time.
Sure, sounds good. It's not like we were busy today. Every day is exciting, and I'll tell you why. Because there's so many plates to juggle and so many, I'm going to stop using all those metaphors. We get a lot of, there's war, there's governments, there's elections here, not to mention economy in Europe, economy in Japan, economy here. It's quite analytical, and that's why I use charts, because I don't have to get overwhelmed by that.
Right, exactly. Yeah, the technicals, the chart is the chart, no matter
Exactly.
what's going on. People joining.
Just some aftermarket moving in a stock that I own. That's why I keep looking over there.
Oh, you're good. You're good.
Okay, cool. I won't do it
You
once
need-
we start the show.
You're fine. If you need to do some trading, I think everyone here would understand.
Awesome.
And then if anyone would like to ask their question, not in the chat, but you would like to ask directly using your unmuting and asking, just pop in the chat that you want to do that. And I will make sure that that can be done. So we can make sure, however you want to ask a question, you can get them answered. Okay, it's 4:30, Rick, so we can get started for everyone who's with us. So again, welcome to today's special coaching session with Rick March. Rick is a co-moderator in the Inner Circle virtual trading floor alongside David Prince and Kira Turner. Everyone here is an Epic Trade subscriber, and so they know David Prince. And the hope for today is that we get some knowledge from Rick that can be beneficial in your trading and in your use of the Epic Trade service. Some quick disclosures here for T3 Live as we get started here. All right, Rick, so you said today you wanted to talk about the 4 pillars that it takes to make a great trader. So that's what we're going to talk about today. And those 4 pillars, as you sent them to me, are plan, focus, execute, and manage. So let's just go through them one by one. Does that work?
Sure, that's perfect.
All right. Let's start with plan.
Oh, I'm sorry. I'll wait for the slide to come up because I'm,
You're good. You're
okay.
good. Plan.
Plan. When you look at a trade or you have an idea. For me, I look at a chart, I get an idea. What am I going to do with that trade? What's my risk reward? How much money do I want to risk versus how much do I want to take a profit on? My plan starts usually the night before as I'm doing charts, and then up until 4 in the morning when I come back onto the VTF. I usually have a plan written down, and I try to follow it. If you don't have a plan, don't push any buttons on your computer because it's like throwing dice. I mean, maybe you'll get lucky and make a couple of quick day trades, but if your plan is to be short queues and you don't know why, then you could get run over, especially on a day like this. Queues closed up 11. So if you were selling scale up today just because you thought it was too high, you would have taken a loss.
Great. All right. And just for everyone, we've had a couple of people join since we started. So for everyone who's still coming in, we are going through what Rick believes are the four main pillars that make a great trader. And again, those are plan, focus, execute, manage. So we just went through plan. Let's go to focus now, Rick.
Focus is great. I mean, I look at my screen and I've got 300 stocks up there. I'm not going to trade 300 stocks. I'm going to look at the one or two that I planned for, and I'm going to stay with that focus. When David sends out his buy or sell puts and calls to you guys and girls, that's your focus. You don't need to be looking at anything else. He gives us a morning call in our chat, which is invaluable. It's also recorded. So if someone comes in late and there's someone on the West Coast, David's thoughts are all there. There are mornings when we say, I don't see anything new. We'll just manage our positions. But when he says his focus stock for the day is Meta, I don't look at anything else. I trade Meta. I know the levels in Meta. And guess what? I usually do really well. The thing when you look at your screens, you tend to want to get in, oh, this one's moving, that one's moving. Don't do that because it's not your plan. Okay, that's first. And second, it could actually distract you from what you planned for.
Yeah, I think that's a really great point, that not getting distracted by, the shiny object in the room, but really focusing on the plan that's been laid out. And I think what's great about Epic Trades, because those, the people here, is that David does come into all of these trades with a plan, with a focus, laying it out very clear cut for everyone. Get in here, trim here, and he guides along through those trades. So these pillars, I think, work great with the Epic Trade subscription.
Wonderful.
Our next pillar is execute. So, Rick,
execute. Make the trade. If you thought about it, make the trade. If you thought you might want to do this, don't think, do, because you will miss, and you will miss what you planned for. If I wanted to buy Tesla today, if I wanted to buy Tesla at 204.75 and it touched 204.80, I would be madder than hell. So if you see it coming near your level, start some. I know David gives you levels in his note to you. I use Fibonacci's. We'll talk about that later, but I always cheat a little bit because I want to be in the trade that I'm focusing on and I have planned for. You see how it goes backwards?
Mm-hmm.
Plan, focus, execute. If this will allow you to walk away at the end of the day with significant wins if you're right.
Mm-hmm. All right, so we're gone through plan, focus, execute. The next pillar that makes a great trader is manage.
Manage. What do I mean by that? I mean, what's your risk reward before you get into a trade? How much money are you willing to risk versus how much money you look forward to making? Now, I never limit my upside because that would be silly. That's not why we're in this business. But I've said in the chat, and I said it today, for example, excuse me, when Tesla was at 212 the first time, I had 212.75 as a moving average. So I shorted some 211.90s. I shorted some 212.30s. And I was using 212.75 as my get out point, my stop out point. I don't put stops in the market. I use mental ones. And guess what happened? 212.30 down to 211, 210.90. Okay, it's a cute little trade in a direction, in a counter trend trade. That's tough to say. Counter trend trade compared to what Tesla was doing. Now, had I looked and planned to be long Tesla, then the trade would be to buy Tesla as it broke through the 21-day moving average to 12.50. Where did it go? Oh, 215. $3, no sweat. That's how you manage a trade. If you can't remember these pillars, try this. Please feed everyone monthly.
Mm,
That's my,
yeah.
yeah, please feed everyone monthly, PFEM. I'm sure I've spoken with some of you before, and I'm sure you've heard me say this, but for the new people, this is really, really important. Excuse me. Cool. How we doing?
Okay, great. So yeah, plan, focus, execute, manage. Please feed everyone monthly. A great little acronym there. Those are the pillars, according to Rick, that make a great trader. Now, Rick sent me some of his rules when it comes to trading. So I want to go through those because I think there's some really great points. And again, everyone who is here live in this training, if you have any questions as we're going through, anything specific you want Rick to answer or help you with, put those in the chat and we will get to them. So the first of those rules is to trade the market, not the money. So explain what you mean by this, Rick, and how you put it into practice.
When I talk to members of the inner circle, and I do that during the day and sometimes in the evening and over the weekend, their biggest complaint is, wow, the market moved and I didn't make enough money. Now, it's not a function of greed, but what it is they were watching their P&L, and that's
Mm,
trading the money. If you're up $1,000 and you want to take some off, trim. But if you make $1,000, close out the trade, and it goes for another 4,000, you're going to be aggravated at yourself. You'll you'll buy in again, size up beyond what you need to. And so that's why I say trade the market, not the money.
mhm.
That's
Yeah,
that
don't
is
over focus on the P and L.
exactly. You can't trade your P&L and be successful. I mean, I've been doing this, well, not since I was 12, but since I was 19,
Mhm.
and that's a long time ago.
Yeah.
I
Yeah.
can't do that math right now. Almost
All
50
right.
years.
What about trade within yourself?
Trade within yourself is easy as well. You may have $1 million account. You may have $100,000 account. Do you want to put on as much risk with a $100,000 account as you would with the $1 million account? Probably not, because it's not what your goals are. Your goals are to build up some equity, build up some money, so you don't have to go to your Monday 9 to 5 or 8 to 7 job, and you can sit in front of a computer when you choose to. This is the ultimate freedom, but you've got to be patient with yourself. Listen to what your gut is telling you. If I'm down $500, I don't necessarily have to make back that $500. I mean, I would like to, of course, but I don't trade trying to get that money back. I trade according to my plan, where I focused, how I managed, how I executed, and I managed pretty poorly because if I'm down 500. But my point is and remains, just because you see some people take 50 calls or 50 or 5,000 shares doesn't mean you have to do that. In fact, you shouldn't. So trade
Mhm.
within yourself.
That's really good. All right. Our next rule is to identify the risk reward before you make any trade.
That's what every time we look at a trade, what's the risk reward? David asks it, I ask it, and I tell the chat, look, you're going to risk $4 in call. You're going to risk $4 in call premium to probably make 20 or 15. And that's the risk reward that somebody wants to figure out to come up with. If it's not good for you, like a 1-to-1, don't do it. If it's 1-to-3, okay, it's considered. And anything more than that is at least the risk reward is worth it. If you don't do that, then you may as well not trade. If you just, oh, I think Tesla's going to stop at 212.75. Well, you could have gotten carried out today. So identify the risk and the reward before you make a trade. It doesn't take long. I mean, it takes, I look at a chart right now of the Qs, and I will tell you that I could buy I could buy 474s and hope that my risk doesn't go below 472 and look to make 478. But if you buy 474s or I buy 474s, I promise you I'm not looking to get out at 474.50. That's
Mhm.
not the risk reward. That's trading the money and not the market. All these rules, they intertwine.
Right. Yes. When it comes to figuring out the risk reward in a trade, maybe for someone who's newer, when you're choosing those levels and your like Tesla, you're saying it could get here, it could get here. How are you determining those levels?
Well, the levels for the stock is easy. I just open my chart and there it is. And every day I
Mhm.
draw charts for the inner circle. I don't draw them, they're computerized. I put charts up in the inner circle and I go through different levels. And there'll be levels of support, levels of resistance, pivot levels in between. And when you're trading options, it's an extra bonus because you have leverage, but that bonus comes with a potential cost of having
Mhm.
the erosion. Now, I don't mind erosion, but I promise you I won't take weekly options on a Thursday because
Right.
overnight they'll go to zero unless you're 100% right. And that's where the risk reward comes in.
Mm. All right, great. All right.
One thing can I make?
Yeah.
Uh,
Yes, of course. This is your coaching session. I'm just here to help things go along.
thank, thank, thank you. The most important thing, one of the most important thing is to sit down and be calm. If you're aggravated, don't trade. If your kids or your pets were keeping you up all night, take a break for yourself. The market will always, always be here. The opportunities will arise and you will be able to make trades, but you have to do it from a calm and thoughtful and relaxed mindset. And it's not in there, but that's me to you. Please don't trade angry. Please don't trade trying to revenge, get the money back because you lost in one thing. Just calm down, take a day off, even if you had a bad day, and come back in 2 days. The markets are going to open up. I promise you, they're going to open up at 8:30 Chicago time, Monday through Friday for the rest of your life.
Yep, that's very true. The market will always be there, but if you're not in the right headspace, get yourself there. All right. Is this a trade or an investment? This is an important question to ask yourself. So, Rick, go through that.
Okie doke. Sorry. You know what
You're
it's like
fine.
talking. You know what it's like all day talking on the headset.
Yep. Hmm.
So, is it a trade? Meaning, am I going to be out by the end of the day? Or am I going to hold it for several days? Or am I hold it for several weeks or months? I think there's a friend of mine in here who we traded Walmart before they split. And I'm telling you, I still have some. My essential, we bought a few, we bought, it split 3-for-1. So when Walmart was trading 160, 3-for-1, I got around 50, the price was 52, but I got 3 times my original investment. That was an investment because you don't day trade Walmart. It just continue. It's one of the, if you look at the chart, it just keeps going up. Where should I enter? Enter today. When it goes lower tomorrow, buy some more because Walmart continues higher. That's, I mean, they showed you today with their earnings. They blew away earnings today. And if it's a trade, I'm going to be out in an hour. I'm going to be out in a little bit. That's okay. Nobody says you have to hold on to it. But, and this is the big but, if you buy it for a trade, don't turn it into an investment because you will be end up taking a loser home. And you'll say, well, maybe this trade will work tomorrow. Uh-uh. You got into it for a reason. You adhere to your rules. You stay within yourself. Your plan was to buy target for a trade. It didn't work out. Close it out. Which brings me to another point. Love your losses. Who loves to lose? Nobody.
Mm.
Nobody likes to lose. But guess what? In trading, there'll be wins and there'll be losses. If you're
Expand upon the love your losses a little more.
sure, if you see a trade that something you got in as a trade and it's going against you, like for example, the Tesla trade I did today, shorting against level, covering some, covering more, and then when it went higher through that level, I covered some flat to a small loss. Why did I do it? Because I said I was using that level 212.70 as my mental stop. When it traded through there, I didn't sell anymore. I didn't stay short. I took the loss on whatever was left. It was a small profitable trade, but that's not my point. In markets that are a friend of mine today held a short Q position for the entire day. And I said to him, I think you're wrong, but what level are you using as a mental stop to get rid of it? And he said to me the worst possible thing, $5,000. Well, that's trading the money, not the market. So if he took that loss right away, take $1 loss on 500 shares, it's $500. You can make that back in another opportunity within the same day. That's the huge mistake. Oh, I put on these Q calls. Well, I'll see what happens tomorrow. No, don't do that if it's not your plan.
Mm. Yeah, great. All right, I think we have, yep, learn to shut out the noise of social media and CNBC. So expand upon this rule that you have.
This is the most difficult rule because I post charts on
Mhm.
Twitter, so I have to pay attention to Twitter. There's no less than 5,000 FinTwit mavens who know everything about everything about everything. Look, good for you. But when you speak in absolutes and you turn out wrong, own it. That's all. I never say it's never going to go through this point. Guys on TV, they're usually just bullish. From Kramer to all the shows on CNBC. I don't watch Fox Business, but shut it down. You can read and educate yourself. That's different. And you do that from websites or newsletters, or like you do with David's letter. But if you give you an example, if you were long Tesla, I keep going to Tesla because people talk about it a lot, and you read somebody who you know or who purports to be a very big winner, and you say, oh, this guy's got a different opinion than me. So what? So what? You don't think he's been wrong? Of course he has. And if anybody says they've never been wrong, they're lying. I don't care who they are. For someone to say they've never lost money trading in a day or trade, it's a lie. It has to be because no one's perfect. No computer, no algo, no option trader. Nobody's perfect. So there'll be losses with the wins, and you have to adjust yourself to it. But I've noticed recently on Facebook, and I go on there for my other business, stand-up comedy, there's people trying to sell their algo to trade foreign exchange, guaranteeing you 14% a month. They should be shut down. There's no guarantees in anything. I know I traded foreign exchange for Drexel in New York for 2 years before I came to Chicago. You're right, Amber.
Mhm. Yeah.
And
Amber
and
said
don't
knowing how to lose is what's important because losing is part of the job.
exactly. So she interrupted me. Don't let her do that, Greta.
Everyone, just a reminder, any questions, go ahead and put those in the chat. All right, so we have charts next. Are you ready to go through the charts that you prepared?
Sure.
So again, Rick is a chartist. He is great at technical analysis. does way more with charts than I can even wrap my head around sometimes. So we're going to go through some of the charts that Rick prepared and talk through some of these principles that he has been presenting to us here. So the first chart is the SPY daily chart. This is what through yesterday, I think, right? Yeah.
Yeah, it goes back to April and through yesterday. Now, here's what you need to know, what these lines are.
Mhm.
The light blue line is the 21-day moving average. The grayish line is the 8-day moving average. The red one is the 50-day, and the green one, which is near the bottom, that's the 100-day. And the 200-day, that's the one that comes in at 498.90. So I trade based on what the market's doing at these levels. Don't pay attention to the pivots right now. Just watch the moving averages. Based on this chart, it held the 8 and 10-day since April. It really didn't go below it until July. So you could have sat long or been in calls and rolled them up. And this gives you a guide to say, well, do I have to get out? No. I mean, there were red days along the way, but if you got out on a red day in June and SPY is $15 higher in July, you're going to be mad at yourself, at whoever, your guru, whoever that is. So, and I don't want to be a guru. I want to help people learn how to trade markets.
Mhm.
That's what I do.
Mhm. So you're saying here the focus is on those moving averages, and when you're not giving up those moving averages, you can stay in a trade, right?
Exactly. Now let's take it a step further. See
Mhm.
that big, thick blue line that goes back
Yeah.
to April? That's an anchored VWAP. VWAP is variable weighted price. Anchored is I set the price where I wanted it to start and that day in April. And
Mhm.
then the software drew that program for me. And guess what? I stopped talking with your hands. SPY stayed above that blue line from
Mhm.
April to August.
Right.
That that keeps you, this should build confidence in you as a trader. Well, it's above my moving averages, it's above my AVWAP. I'm going to stay long. And
Mhm.
on the other side of it, in August, when it broke the AVWAP and it came under the 21-day, you get out. Take a loss, maybe go short if that's your thing. But that's why charts are a guidepost. Do I know where it's
Mhm.
going from 1 minute to the next? Probably not. But if that's not my plan, it doesn't matter.
There are so many moving averages. What would you say are the most important moving averages for a trader to use?
You can use I know my friend Scott Redler says the 8 and 21-day. Simple
Mhm.
moving average, no exponential that will mess you up because you're other people will say, "Whoa, my moving average is here," and you'll think you made a mistake. It doesn't matter. Simple moving averages. Why? Well, I'm a simple guy. I like I don't want to have to delve deep and do surgery on a chart. I can look at it and I say, okay, there's my moving averages. It's been trading up, and the red line is the 50-day. So as long as it stays above the 50-day, I'm cool. If it stays above the 21-day, which is the light blue, I'm even better. And the line on top of that, the yellow one, that's the 10-day. So holding a moving average, phenomenal. This is a breakout chart that in a trending market that if you tried to sell between or short between April and August, you may have had some good day trades, but you did not make the money you should have. And that's what this business is about. Identification of a trend, stay with it, and make money as you're going.
Mhm. While we're here, Joe asked a question in the chat. He wants to know how you determine the starting point for an anchored VWAP.
That's a great question, Joe, and it depends on a couple of things. The time frame of the chart. I use daily charts like this. You'll see a weekly chart in a few minutes. if you're day trading, you can, in a 5 minute, the anchored VWAP works. You go from the closest low that you recognize. In this case, it wasn't the low of the year, which was 494.97, but I took it right there as it started to stabilize above the 100. That's,
Mm.
and you can make yourself crazy drawing these lines. I mean, the AVWAP, you can anchor it anywhere. You could anchor it, stop pointing, Rick. You can anchor it at that 564 number.
Yeah, if you want me to highlight anything, I can, I think,
Oh,
right? Can
good.
you see my cursor? Yeah, you can
Yeah.
see that? Okay, yeah. So if you want me to point to anything, I can. Just
Okay.
let me know.
Point to the 564.84 high in July,
Here.
right? You could have easily drawn an AVWAP to show
Mm.
you what the stock has to go back above before you feel comfortable being long. These are,
Because if you anchored one here, would it,
it would
how would it look?
it would come in above.
It would be above all of this, right?
Yes, it would.
Okay.
The longer
He
the
says
time,
he's mostly interested in day trades. So
cool.
if you were day doing an anchored VWAP for a day trading chart,
What
you would
time
be
frame?
looking at a
What
different time frame, more
does
like
he
maybe a
use?
1 minute, 5 minute chart. What
You
time
can
frames are
draw.
you using, Joe? I asked him, so maybe he'll let us know what time frames.
Okay.
He said not sure.
Okay.
So, what would be your suggestion? Maybe.
Get sure. This is part of your
Mhm.
plan and your focus. If you don't know what time frame your charts are on, then pretty much you won't know how to read them and placing where whatever's best for day trades. Joe, did you hear me say there's nothing perfect? I'm pretty sure you did. And when I'm saying that, I'm not trying to be be superior or put someone down. It's whatever works for you. If you don't know, then paper trade for a while. If you just want to follow the note that you get from David, it doesn't matter what chart you have because he gives you levels on that chart, on that sheet. But in the process, educate yourself. The last thing you want to do is go to a guy like me and say, hey, if I put up a 30-minute chart, what's the moving average? I can do it for you clearly, and I can tell you what those moving averages are. But what have you learned? Nothing. And that's what you need to do.
All right. Do you see that next question? I can
Yes,
read it out loud for everyone just in case someone doesn't have the chat open. But how do you determine levels? Is it based on manually drawing support/resistance lines based on weekly timeframes or using moving averages or any other method? And then a follow up, how to build confidence in those levels.
sure. You see the little yellow lines with prices above them? Those are pivots. That's right. Those are pivots. And what's a pivot? A pivot is an area that either paused the index or stock from moving further. And then when it reclaimed it, it became
The
support.
other way, right?
Right. So that's all my charts have these little lines on them. So let's take a look in the middle of May. The pivot low is 518.30. How did I come up with it? Because it traded up, it went green, it crossed back above the AVWAP, the 21 day and the 10 day. So that 518.30 is a pretty significant level.
Mm-hmm.
When if you bought at 519 with a 518 stop, you could have ridden that all the way up to 550. That's a nice win. And you never would have had to get out.
Mm-hmm.
So I put those pivot highs and lows on the chart for a reason, not to make myself crazy. And as far as the moving averages, they're done by the computer. So the only things I draw is the pivots and even the Fibonacci's, which is on the right. I'll get to that in a second.
Mm-hmm.
I'll get to it now. Why not?
Yeah,
Fibonacci
explain the
is
Fibonacci.
Fibonacci is based on real world experience. I'm going to really simplify it. Quarter, a third, a half. 3/4, 2/3. That's your Fibonacci range. And guess what? You see that in the lines and bar to your right, all the way right. That's a
Got
Fibonacci.
this.
Yes.
Okay.
Now, why did I start it at 564? Because that is the high so far this year or in this chart. And the low, 494, 97, that's close to 495. And that's why I made the low. Now the computer will draw all these levels, give me the prices. It takes the hassle out of it. But what good is it, Rick? I'll tell you exactly what good it is. I do that a lot in our chat too. Take a look at the level of 510.
Right here.
Yep, that's a pivot. Now move across that white line,
That's
510.
the fib level of, okay.
When your fib and your moving average or your fib and your Fibonacci have confluence, that makes it an even more powerful indicator. And these are things that you will notice over time, I promise you, but you have to put in the time reviewing the chart.
So knowing this fib level, when it hit that, it gave you confidence that that was going to be a low point where the stock could turn higher?
I wasn't sure that 510 was the exact low for the
Right,
year
but
or the, oh
around
yeah.
there.
But I would start buying 511 and a half, 511s, 510. We recently did this in Inner Circle with NVIDIA. When the
Mhm.
world was
Yep.
coming to an end, we bought NVIDIA with David's help from 103 down to 90. Well, yesterday I sold the last of them at 113 or
Mhm.
116. That's phenomenal. Is it always
Yep.
going to be the low? No. But when you see this confluence, it's very, very important.
Let's go through to the next chart, which is SVB Financial. You prepped this chart just to talk through what we're looking at. And again, everyone, we've gotten some good questions so far. So as Rick is talking about these principles and this charting, oh, Jim wants to know how you're doing these, your broker platform or TrendSpider. These are TrendSpider, correct?
Yes,
These
they are.
charts? Yes, TrendSpider charts. And like you said, the software will give you the moving averages. It's just what you take from those moving averages when you're looking at them for your own trading plan.
Exactly. This is a weekly chart of Silicon Valley Bank. Why a weekly chart? Because it was an overvalued .com bank that went broke. I mean, to zero. Now, this chart, you traded down from 700 to what's the price at the white line? It's let's say three.
193. Oh,
Oh, oh,
down here?
that's around 300 when it broke the 50-day. Okay, I get that from looking over to the right at my
Yeah.
pricing. Now, when it broke
Which indicator is the 50-day? Which color?
the red one, the
The
one
red
you're
one.
on
Okay.
right now,
This one.
no, the other one, that
The
one.
blue one.
Yep.
The blue one. Okay, this light blue one. This is
No,
your 50-day. Okay.
that's the
Oh,
21-day. The red line, you see my white arrow there? Oh yeah. Do you see that? Me moving it around?
no, I can't see yours.
All right, forget it.
You can only see mine.
Gotcha. And
Just which color is the 50?
the 50 is the
This
darker
bottom
red.
one?
Yes. The
The
upper one.
bottom. Okay.
Yes. I've changed the color. This is an old chart, but I've changed the
Mhm.
colors to make it easier to understand. My
Yeah.
point being, it's below the averages. It's below anywhere it should be. Risk reward here, I think it's going to zero. It's getting bailed out by Chase. It's getting bailed out by Citi, and they're getting bailed by the Fed. What's the value of their stock? To me, nothing. So
Mhm.
even after a huge decline from May to, and I didn't do this on a daily chart because they don't trade anymore. This is zero. So I put it in a weekly. But consider in September where the stock was.
Way up here.
So when it came down from 700 to 200, most of the move had been taken because it can only go to zero.
Mhm.
But when the news came out and I saw that was under that pivot of 193.87, I bought puts and I got short. And it happened so fast. 2 days later, the company was broke and I was getting my stock back over the counter. Not to get into the detail, but this was life-changing money for me and for a lot of
Mm.
people in the room. Those are the kind of trades you have to identify. Yes, it's down a great deal. In fact, David discouraged me from making this trade.
Hmm.
But there are times I shouldn't, but this was the time I should. I did, and it paid nicely.
Mhm. Yeah. In the chat, Peter asked, when we analyze multiple time frames on a chart, what is the use or explanation of this? Let's go to the next chart and maybe you can talk about some of that here.
This is a daily chart of SMCI, and we know how volatile SMCI is. It was at
Mhm.
1229 back in March, and today it's trading in the 500s. How do you trade this? All right. The first thing I point out with the arrow is the first break of the 200-day and the 100-day. Those levels had confluence there. When it closed below there, it was time to get out of longs and consider shorts.
So focusing on Peter, just to make sure we're answering Peter's question, you're saying when we're looking at multiple time frames, when you have confluence of two of them, that gives you more confidence, right?
Exactly.
In a trade and in a spot. Okay.
The more confluence, the better, because
Mhm.
if it violates that, it's a great short, or you know to get out of your longs. If it holds that,
Right.
you can buy against it. So
Mhm.
buy
More
against your confluence.
confirmation.
Exactly.
Mhm.
Exactly.
Mhm.
Now let's move on to the reclaim the moving averages here.
Mhm.
So that's when it would be no longer time to be short. Now, if you were a swing trader and just traded moving average breakouts, well, you sold it at 1106 and you bought it back at around 700. That's not bad. That's awesome. And then what the stock did, and this is what that yellow box is, it traded in
Mhm.
a range. It traded in a range from June through July and let the moving averages catch up to it, because it couldn't catch up here, but it did catch up to it once it got into the range. So how do you
Mhm.
trade a range? Well, there's a couple of ways. You can trade the breakout above, or you can trade the breakdown below. I chose to leave it alone
Mhm.
because when it's in the yellow box, and you can see it's choppy, it's forming a pattern within the box, but when you see a pattern like this in a range trade, Alibaba, you look at the chart of, I don't have it for you, but I know this. If you look at the chart of Alibaba, you'll be able to draw a 5 to 6 month range. It hasn't been able to
Mhm.
get above or below it. When it does, that's an opportunity. Whether it's above or below, I don't care. But identifying the range, that's what's important. So
So
now
you
it's
can
back.
see that all of these, what is it? 1, 2, 3, 4, 6 moving averages kind of all consolidated here when it kind of caught up with itself. And then this is the point where it started breaking below all of them, right?
Exactly.
Mm-hmm.
Exactly. So when it broke below those moving averages, it was time to get short again. You wouldn't want it when you identify a range, unless you're really a surgeon, you don't want to buy at the low and sell at the high or try
Right.
to. It's just too difficult. And you know, what I want to say is daily charts can be deceptive because you're like, oh yeah, it did that. But if you're sitting at your screen, you're going to get a lot of squiggly lines in between an area, and it may wear you out when you
Mm-hmm.
take a loss or take a short profit and you don't need to. So push back. When this is in a
Mm.
range like it was in those months, don't trade it. Wait for
Mhm.
the next move. And guess what? You got it. Another opportunity arose to be short SMCI at 862. It did not give you a reason to get out until just recently in the around 500. That's 300 points. 10 shares is what, $36,000. You don't have to be a
Mhm.
rocket scientist to make $36,000. You can be a trader and do it. Now
Mm.
let's go one step further. Check the Fibonacci's.
Mhm. Those are over here, right?
Right, exactly. So it wasn't exactly the same confluence, but where the moving averages broke and you look across to see the Fibonacci's, there you go. Perfect. Around 900, somewhere between 862 and 948. So call it
Mhm.
900. Well, the stock traded below 900. Now it's below my moving averages. It's below my Fibonacci's. It's time to get short. And
And
it's,
again, how do you
I'm
come
sorry,
up with the? No, you're fine. Just again, because I'm not as skilled as you, and not everyone is. How do you come up with these Fibonacci levels again?
I took the Fibonacci's from 1229, which was the 52-week high. Did you see it back
Uh-huh.
there in
Yep,
February?
over here. Uh-huh.
Yep. To the low that got created at 494. Now, before this 494 was created, there was a low over here that's not in the chart. I apologize for that. And that's where my Fibonacci low was. Now, important to remember, the top level is a pivot. The bottom level is a pivot. All the numbers in between are the Fibonacci calculations.
Mhm.
And I mean, it, looking at charts like this, you go, well, why didn't I make $1 million? Because it's not that easy. And I don't
Right.
care if you're a computer algorithm that puts these things together and calls you at home the night before and says, you got to be short SMCI and here's your risk. But what do you do if the stock opens higher?
Mhm.
Or what do you do if the stock opens lower? Are you still going to short it? So the answer is you gain this with experience. And I know a lot of people hide behind it, but I've been doing this for over 50 years. And I can tell you that I can draw a Fibonacci from any higher low in this chart from 1020 to 700. And I know if it breaks below the 700, it's going lower. Same
And the
token, if
way
it
the
go,
Fibonacci's are is like you choose your high, you choose your low, right?
yep,
You choose your midpoint, and then like your three
you don't
quarter, your
have to you don't
quarter.
have to choose anything besides a high and
Well,
low.
you choose the high and the low, and then from there it's a midpoint, a quarter, a three quarter
Exactly,
level. Okay,
exactly.
great. I'm learning, Rick. These
Good.
are things I don't know. So it's great. All right, let's look at the next chart that you prepared. It's Eli Lilly. What are we looking at?
We are looking at Eli Lilly going back to May or March of last year. It traded below the $800 level for, what is that, 5 months, 6 months?
Yeah. Hmm.
But it was always above the moving averages. But Lilly's a high price stock with a lot of movement. So what do you do here? What's your signal to get long? May 26th. Can you point to that green candle?
This candle.
Yep,
It
that
broke above that $800
exactly.
resistance, right?
Exactly. And you would buy it there and you would use a mental stop of the low of that day below 800, which is probably 790 or something. And you could have ridden Lilly a lot higher. I mean, look at that. The all-time
Mm-hmm.
high is 966. Now they just reported earnings a few days ago. And guess what? It hit a bottom at 747.55, which is a fib. Let's look across. Do we see any other numbers? Oh,
Mhm.
70.34, 730.34. So
Oh,
we
these.
don't,
Okay.
right. So we want to go back and look at previous reaction lows. Those are pivots. Those are those little
Mhm.
yellow lines. And maybe you didn't buy it at 747, and maybe you didn't buy it at 755. But when it crossed over the moving averages and that thick blue line, the AVWAP, look what
Mhm.
happened. Can you point to that, please?
Which one? There are multiple.
Right, the one that just happened in August.
This one that we're anchored here.
Go up a little bit and to the right. The red line, there you go.
Right here.
Well,
Okay.
yep. Well, when you broke above that, that's a buying indication.
Mhm.
Why did it gap up that day? Because they had positive earnings. They made $3 billion selling their weight loss drug in revenue, $3 billion in revenue for the quarter. Are you kidding me?
Mhm.
I have a doctor, for instance, it cost him $4 to make it. If you go to the drugstore, it's 1,000. That's a decent margin for anybody. So when it traded back above the 21 day and then again the 50-day, so you would be in somewhere around 850. Well, today the high was 937.
Mhm.
Do you have to be long 1,000 shares of Lilly? No, I wasn't, but I did have 30 calls and they paid monstrous. And this is what options do for you guys. You get leverage on your money. You go far enough out in the time that you're going to get paid and you won't have erosion.
Mhm.
And that is how I made money in Lilly. I had some stock, but I didn't have 1,000 shares. I'm not putting 1,000 shares of an $800 stock on my book, but I will put 30 call options at $10 a piece, which is my risk is $3,000. And I sit back and I watch. Right now, do I have August options? Nope. Do I have September options? Nope. Do I have October options? Yep. I have the October 1,000 and the October 1,200. What are you crazy? 1,200? Well, look at the top fib, the 1.236. That's
Mhm.
1,018. Now, if it gets there in September, those October calls are going to pay me big dough. I'm sorry to be so graphic, but I
It's
mean, it's
fun.
exciting for me. It's
Yeah.
exciting
No.
for you guys to see what you can do.
Mhm.
And we didn't even bring this up, but you broke above the pivot at 927. Guess what? 919 was a fib.
Mhm.
So along
Okay.
the way, you're getting don't worry, it'll
You're
be all
good.
right.
Keep going.
Because no, I'm saying that's what the market's giving you with the
Right.
rallies and where it holds. Now it's up in a very short period of time from 747 to 927. So is it due for a pullback? I would say yes. And the number, believe it or not, the number that I gave to the people in our room was 798. Can you bring your cursor to 798? Keep going.
Was that down over here?
Yep,
Be like this level-ish, right?
right,
Where the
exactly. When it broke
yeah.
above that AVWAP. If it comes back
Mhm.
to test the AVWAP, you know your risk reward. Now, what's
Mm.
cool about this is I have an AVWAP that's anchored in April, and I have one that's anchored, you can't even see it off the chart,
Right.
probably in January. Well, when it
The
broke,
points where they cross are those that make it a more
that's confluence, right?
uh
And look where Lilly held. It held that level.
Hmm.
It held the bottom of the AVWAP.
Hmm.
And then, oh my, when it traded above the other AVWAP, which is right, which is probably 830, next trade 908. Now, it wouldn't have exploded like this if it wasn't earnings. I understand that and take
Hmm.
that into consideration. But these levels work for a reason. Fibonacci exists for a reason. And I found a way to capitalize on it for traders. And I try and teach that. Now, I've thrown a lot of levels and a lot of malarkey at you guys, not malarkey, but a lot of terms, confluence,
Right.
Fibonacci. And I'd be happy, as long as we still have time, to explain more to you.
Well, Jim in the chat wants to know if there's any reason that you don't use Bollinger Bands.
I know what they are. I've utilized them before. This chart has got a lot of stuff. It's
Yeah.
got four moving averages, an AVWAP, and a Fibonacci. Could I put Bollinger Band in here? Sure. Would it amplify my understanding of where the market's going? I don't know. I think it would be more confusing. So
Mm.
considering the chart is your map, I have no bias against Bollinger Bands. I like John Bollinger. I met him once. He won't remember me, but I like him. He created it. It stays within a range. It's great. For me,
Hmm.
and what my trading pattern is, I don't use Bollinger Bands.
Hmm. You want to keep it a little simpler. So for you, you use simple moving averages,
Exactly.
VWAPs, anchored VWAPs, and Fibonacci's.
That's
Those are
it.
your bread and butter, right?
Exactly.
Peter asked, how do you calculate or estimate the expiration dates for options? It says, I've used a 0.3 delta, but what is your advice?
It depends on the stock, or it depends on the index. I have some Q options with a 0.4, and then I have Lilly options, which are 0.6, I think.
Hmm.
That's the last thing I consider in a long dated option. You consider that mostly when it's a weekly or next week or 3 weeks out. Beyond that, it's not a factor for me.
Does that have to do just with the
Time.
time erosion?
Exactly. Exactly.
Okay.
Exactly.
All right. Everyone, kind of your last call to get in questions as we near the end of our time here. But Rick, any other points you want to make? We can go back to charts. We can
Is this the
talk
last one?
differently. No, well, this is the last chart that you sent. Yes. We got
Oh,
a
okay.
question saying, having a small account, when do you take your losses and when do you take your profits if you don't have much capital to trade? And do you add to positions if it's going against you? So we talked earlier, you don't trade the market, don't trade your money. But of course, account
Exactly.
size matters when it comes to how much you're willing to risk.
Exactly.
So answer
And
that question.
it's universal. If you have $10,000 in an account, are you going to want to risk $1,000 on a trade? Probably not. So
Mm-hmm.
you have to really fine tune your trade to say, if it, I think the risk reward here is I'll lose 200, but I can make 600. So if you can have a
Mm-hmm.
3-to-1 risk reward and you find that and you impute that into a trade, you'll be okay. As far as adding to a loser, that's not a really good idea, especially
Mm-hmm.
when you have a small account, because then you won't look at the market. You'll trade the money. You see how
Mm-hmm.
all this ties together. Oh, I have a $2,000 loss in a $10,000 account. I'm not saying you do, but you can't help but trade the money then. And that's a
Right.
bad, bad play.
Mm-hmm. How do you know if a position is worth going against you versus just, pulling back and giving you a spot to add and then gonna run from there?
How do I know? 50 years of experience. I look at the chart every day,
Mm-hmm.
sometimes 3 or 4 or 5 times a day.
Mm-hmm.
These levels on the daily
Right.
chart
So
don't
you're
change.
using these
Right.
averages to tell you.
So I can give myself a wider berth between risk and reward. if you're starting out and you have a small account, and I mean under 50,000 or even under 100,000, your loss will be governed by you. What do you want to risk?
Mhm.
That's what I'm trying to say. I don't add to losers. I know where I'm going to get out if I'm wrong, especially if you're swing trading. You just don't.
You go into every trade with a plan, right? We go
Exactly.
back to our pillars of making a great trader. You have your plan,
Please
your
feed
out point,
everybody monthly.
your add
That's
point.
exactly. And if you
Mhm.
do that over time, you will develop a skill that I think I've developed that will allow me to be a little bit easier. Do I still sometimes get chopped up? Yes. Why? Because I'm honest. I don't lie to you and say I made 800% on these things. No. Sometimes you get carried out, not carried out, but
Mhm.
you have a bad day. Sometimes
Mhm.
you have 2 bad days in a row. The third day I take off, but that's what happens. But I don't do that anymore because I'm here to teach people.
Mhm. Jim wants to know if you ever use leveraged ETFs instead of options.
I use leverage ETFs in addition to options. How do you like that?
Okay.
It's my risk appetite is greater than most people's. I
Yeah.
have a mid 7-figure account. I'm not bragging, it just is. So I have a big risk appetite. If you don't have that risk appetite, don't do it. But even the
What's
leveraged
he
ETF,
asked a follow up? What's the max time that you will hold a leveraged ETF before decay eats it up?
well, they decay overnight
Mhm.
and they don't decay fast. They decay slow, but options, your expiration date is, that's the day. If you're not in the money, it'll be zero. The ETFs or ETNs, again, I could say a week, I could say dailies. It's up to your risk tolerance. And that
Mhm.
as a trader, you have to find out.
Mhm.
What are you willing to risk, Jim Barnes? I think that's his name, right?
Mhm. Yeah.
Okay. Yeah. Again,
Okay. Do you
2%.
see that question?
I
Is a
do.
2% risk on an account the most max loss of 5% on any account a good rule to have?
If you have $1,000 or $5,000, no, it'll be very difficult for you to trade around that. If you have
Right.
6 figures in your account, yes, but I don't use the dollars because then you are trading the money
You're
and you can
individual to each trade, right? For that risk
right.
reward
So if I
calculation.
think exactly, so if I think that the Qs are going to sell off between now and Monday, I'm not going to percentage my losses because that's trading the money. I know my
Mhm.
levels. I know where I don't want it to go back above.
Right.
It, de-
Well, you go into each stock with a plan of if it drops to here, then I'm out. But you're not saying if I lose 5% of my money, then I'm out.
exactly,
Right.
exactly. You trade on levels. You trade on technicals, which are all laid out for you here in these charts that I've shown you, and you trade with your rules, and you will be a successful trader.
Mhm.
Over
All right. So
time, let me say that, not
yeah,
overnight.
yes. Quickly, let's just go back to these are our four pillars of being a successful trader: plan, focus, execute, manage. Please feed, what was it,
Eh,
everyone
eh,
monthly?
Or Monday makes more sense, I guess.
Please feed
But
everyone Monday or monthly, but PFEM, plan, focus, execute, manage. And they all intertwine with each other. If you have a plan for your day, every day for trading, or a plan for each individual trade, you focus on that plan, you execute that plan, and then you manage the trade according to that plan. Right, Rick?
exactly. And the manage part comes into things, and I know a lot of people have heard it, trim and trail. Take
Mm-hmm.
profits along the way and trail with a stop. That's trim and trail. And sometimes you may find yourself trimming yourself out of a position.
Right.
That should be the
You could
worst thing
make
that
you
ever
could make the
happens.
most profit on your final 1/3 of a
Ex
trade.
exactly. I use 25% as my final third. I use final third. My final quarter is at my
For your final
trailer.
piece. Mhm.
It I make more money on the trailer sometimes because at that point I'm coasting. I'm I pay attention to the plan. But if I think it like Lily, I think Lily can go to 1,000. Will it go there tomorrow? No. But
Mhm.
will it go there from the mid 800s? I'm pretty sure it will.
Mhm.
So
All right.
that's my plan. And you
Great.
should have a
All
plan
right.
too.
Yes.
Not you,
Every
Greta.
trade, well, yes, me too. Every trade should start with a plan. Because if you don't have a
Exactly.
plan, then you don't know what you're doing. You don't know when you're adding, you don't know when you're getting out, and then you're just setting yourself up for a lot of risk with no plan.
This is a strategy that will work over time. How do I know?
Mhm.
I'm not 19 years old anymore and I'm doing
Mhm.
fine.
Mhm.
So plan, focus, execute, manage. If you remember that after walking away from here and don't get scared by Fibonacci's or Bollinger Bands or 25 moving averages, don't worry about it.
Mhm. Hey, I learned how Fibonacci's are done today. I didn't know. So you
Well,
taught
there you
me, Rick.
go. Thank you.
All right, everyone, thank you for being part of our, and Jim said me too. Suzanne, this was so good. Thank you. Yes, more of these, please. So people want you to do more of these, Rick. So we're going to be on you to do
All
more of
right.
these. All
I'll have
right.
to come up with some new acronyms there.
Mhm. Everyone have a, yes, this is recorded. I think we'll be sending out the recording to everyone who came. So be be sure to look out for that so you guys can refer back to it when you're figuring out how to do an anchored VWAP or what moving averages to look at or what Fibonacci's are. Monica says the recording will be available in the member portal. All
And
right,
if you
this
you have
is,
a reason to
they
get
want
in
you to
touch
end
with
with an impression, and I want you to do it too. So give us a good impression to end things on here, Rick.
Oh,
If people who don't know Rick, he's really great at impressions, and David
I
makes him
do
do them
stand-up
in the
comedy.
room.
And as
Yes.
Richard Nixon, let me say this about that. I believe that I am not a crook, but I will not sell naked calls because that is not a good strategy. This March kid, he knows his stuff. Greta, she knows her stuff. That was Richard Nixon. You're all probably too young to know what that was.
All right, great. All right, thank you, Rick, for doing this today. Everyone have a great rest of your Thursday and a good luck on Friday for the end of the week for your trading. All right, I'm gonna go. I think you can go to Rick, but I'm gonna go. So bye, everyone.
Bye. See you soon.